This is NDTV, and you're watching NDTV Profit.
All right, Bianca, I'm going to take over from there. The January industrial production numbers are looking extremely strong. 6.8% growth in January in industrial production versus the 2.1 that we were anticipating. And even the range, I didn't see a single number, a single projection, which was above 3.5%. So at 6.8, this number is hugely positive, and I'm absolutely certain that the swing probably has come in from the swing is coming from the manufacturing sector. Months and months of sluggish growth, and now you suddenly get an 8.5% growth in manufacturing in the month of January. That number's got to be a bit suspect, but we'll try and look through the breakup to see where it's coming in from. But you've got 6.8 headline growth, 8.5% growth on the manufacturing sector, negative 2.7 on the mining, so that's predictable. Electricity has actually come off this time and grown by only 3.2%. Generally, it's the electricity component which has been the strongest. This time, electricity has flattened out to 3.2%, but more than being made up by manufacturing, which is up 8.5%. That's one of the strongest numbers on manufacturing that, if I'm not wrong, we would have seen in this entire fiscal year. What is the breakup on the consumer and the capital goods side? Capital goods output negative 1.5%. We'll have to check in to see whether there was a base effect there or not, but it's not hugely bad. I mean, we've seen negative double-digit numbers on capital goods, so negative 1.5% actually is not all that bad. Consumer durables goods growth has come down to a negative 6.8%. So consumer durables seem to have come down very sharply. Consumer non-durable growth is at 42%. These numbers are all over the place. These numbers make very little sense. We should probably get the chief statistician online to try and ask him what is behind these numbers, because they really don't make any sense. You've got non-durables growth at 42%. You've got durables growth at negative 6.8%. You've got manufacturing pumping up to 8.5%. You've got electricity coming down to 3.2%. So the headline number is at 6.8%, which is a lot stronger than expected. But I'd be extremely skeptical about these numbers. There definitely seems to be something amiss in them. Let's try and see if we can go across to our panelists to try and get reactions as we get more and more details, pick up on more and more details on the breakup. I think Dr. D.K. Joshi is with us from Crisil. Mr. Joshi, what do you make of this number? This seems bizarre. You've got a headline number at 6.8. Within that, non-durables output has grown by 42%.
Well, actually, the IIP numbers have been quite baffling, not this month, but I think for the last couple of months. I think my sense is that this today's numbers are exaggerating the upturn, and I think the earlier numbers were underplaying that. I think it's extremely difficult to make any sense out of it, and I think even very difficult to take a forward-looking view out of it, because you don't know whether next month it's going to be at 6% or maybe 0.6%. It's become extremely volatile, and I think this index is not serving its purpose now anymore. I mean, that's my initial remark. And I think 42% growth in consumer non-durables. Some pickup was expected because inflation has been coming down, so that gives some boost. But 42% is, I don't know where it came from. So overall, extremely difficult to connect the dots out of this data.
Just bear with me, Mr. Joshi, because I'm going to try and read through the numbers, the breakups, to see where this anomaly is coming in from, and you have to call it that. It is an anomaly. You've got, in terms of industry, 13 out of the 22 industry groups in the manufacturing sector which has shown positive growth. Food products and beverages has grown by 92.6%. Food products and beverage, one category, has grown by 92%. There's been a 56% growth in publishing, printing, and reproduction of recorded media. These are the classifications, and these are the classifications which have shown the highest growth. 29, almost 30% growth in medical precision and optical instruments. On the other hand, you've got a negative growth of 30% being shown in electrical machinery. Negative growth of 14% being shown in office accounting and computing machinery. So you can see what has skewed this entire segment already. I'm going to look through some of the consumer good categories to see what's happening there. There's been a 127% increase in zarda and chewing tobacco. That tells you why the non-durable segment is up so steeply. 127% growth in just that one category, which is zarda and chewing tobacco. Surely that doesn't contribute significantly to our industrial growth trajectory, but it does to the IIP numbers. Marbles and tiles are up some 69%. Newspapers are up some 57-odd%. And if you're looking through some of the other ones which have shown high growth, petroleum coke has shown a growth of about 246%. Mr. Joshi, coming back to you, anything within that? I mean, you want to pick up on, but you can see that there are one-off numbers which have clearly skewed the headline number there.
Well, I think to be honest, I mean, I'm not able to make any coherent story out of the data that you just told me about. I think it's extremely volatile, and I don't think we should read anything of this. I mean, so it should be completely ignored, I mean, according to me.
Okay, Mr. Joshi, let me stick with the parts that do sort of make sense, kind of. I mean, on the durables side, the fact that you've seen consumer durables growth down 6.8%, that come in on auto sales, etc. So maybe that's something that's believable?
Yeah, I think consumer durable is also better estimated than other parts of IIP, because I think there's firm data available on automobile sales, on car sales, on commercial vehicle sales. Commercial vehicles have been doing extremely badly of late. So I think all that is, I think consumer durables is accurately measured. I think the electricity going down is somewhat explainable because the coal supplies, there was an issue, but I think now the coal supply is improving and the electricity production is going down. So it's that also leaves some question marks. Overall, I think it's extremely. My sense is that this data will be revised going ahead, and I think this doesn't tell you of a recovery right now.
Yeah, no, I think you'd have to be extremely sort of naive to look at this number and say that there's any sort of recovery coming in, because this is an absolutely unbelievable number. Just looking at some of the other aspects, Mr. Joshi, if I could just throw one last question at you before I try and get a couple of other voices in. So basic goods growth is at 1.6%, and I think intermediate goods, let me just pick up on the intermediate goods number. I don't have the intermediate goods number actually, but basic goods, capital goods, negative 1.5, plus 1.6% on basic goods. Anything there, sir? What's flagging off?
No, I think nothing, because all those components that you just mentioned, even I think intermediates has been very volatile over the last couple of months. I mean, going up and down. So I think it's,
Mr. Joshi, I'm sorry. Mr. Joshi, I'm interrupting you for a minute because I have Mr. TCA Anant on the phone line and I need to get him on. Now, Mr. Anant, thank you. Statistician giving us some explanation, and he's saying exactly the same thing. That was our take right at the start, that don't look at this headline number and deduce that there's an improvement in the economy, because if you strip out where the growth has come in from, the growth has basically come in from consumer non-durables, and within that one odd category like Zarda chewing tobacco, which is not it doesn't say much about what's happening in the industry. So if you strip all of that out, the more significant, the more sort of meaningful components do not show you anything much in terms of a change in trend. Mr. D. Joshi is with us. Mr. Joshi, I wonder if you could hear what the CSO was saying, but it's exactly what you said. I mean, there's doesn't tell you that there's a change in trend, there's a pickup in the economy. It just tells you that there are one-off items which, as always, are skewing industrial production.
And these items keep changing, so I think you can't be sure, I mean, that you keep certain items out and then take a call. Even that is not possible, because last year I very distinctly remember there was something like alarm clocks which was growing at 1000%. So I think these, so that is actually making it very difficult to interpret trends from IIP data.
All right, so before I let you go, Mr. Joshi, then, keeping in mind all these anomalies, I'm just wondering what lies ahead in the week. The inflation numbers now seem to be a lot more reliable. I guess that would be key to seeing whether we get anything in terms of rate action on the 15th of March, or have you more or less ruled that out already?
Well, I think RBI would like to have a look at the fiscal numbers, I think, before they take the rate hike, or take any decision on the rate. So I would expect March 15 to be a non-event as far as monetary policy is concerned.
All right, sir. Thanks so much, Mr. Joshi, for joining us and giving us your take on these numbers, bizarre as they may be. Thanks so much for your analysis. I'm just going to, take a minute.
This is NDTV, and you're watching NDTV Profit.